Hey, my name's James Nixon and welcome to my YouTube channel. This video is time to ring the alarm bell because interest rates have hit 6% on average, and that is going to hit a lot of people, especially 800,000 people who are going to be remortgaging in the next year. We're going to cover all of that and more, what you should be doing right now. So make sure that you watch this video to the end, subscribe to the channel, hit the bell notification, check out all the other content on the channel as well. And make sure you smash that like button, guys, as well, because that really helps with the YouTube algorithm. So, interest rates. They've just hit 6%. Now, the Bank of England base rate is not changed yet. And so what's happening is mortgage providers are getting ahead of the curve, right? They know what's coming. We kind of all know it, right? There's interest rate rises on the horizon. And the reason for that is the inflation data that's coming out on Wednesday is gonna be horrendous, absolutely horrendous still. And so we had 8.7% inflation last month, and the Bank of England, the government keep promising us huge drops in inflation, but we're only gonna be dropping on Wednesday as expected, that we're gonna drop to 8.5. That's crazy. Eurozone has got it down to 5%. America has got it down to 4%. We are sticking at nearly double digits. Nearly double digits. It's not much that would kick that back up into 10%. It is really not moving. And so the Bank of England is kind of being forced. Jeremy Hunt has said he backs the Bank of England. Rishi Sunak is saying he's not going to help mortgage homeowners at all. Their main priority is to get this inflation down because they see that that hits more people than higher interest payments on your mortgage and stuff like that. So what the banks are doing, HSBC pulled all of their mortgage products last week, as did Santander. Other banks were doing the same, and they've gone back on the market, and the average rate is now at 6%, which is pretty hard to stomach. I was looking at one of my mortgages here. I won't show you too much details with the mortgage works, and it's crazy how good a deal I've got on that one. Fortunately, that's fixed for 5 years. I've got it at 1.8%, which is absolutely bonkers cheap. Fortunately, that one is fixed for 5 years, so hopefully by the end of 5 years, well, it's 4 years pretty much now, then we will be looking in a much better scenario, but we can't be certain. So what's the reasoning behind all of this? Well, the reason is this inflation has to come down. That's the government's core thing that they're focused on at the moment, and that means that interest rates will keep going up. Now, it is expected that tomorrow, or Wednesday, sorry, that the interest rates will go up 0.25%. So we'll be going up to 4.75%, which isn't a huge jump, but it's enough, right? Now, I don't think that off the back of that, you're going to see new mortgage deals going up. The mortgage companies have already done that last week, right? So they've already preemptively put their rates up. And what's interesting is they put them up more than 0.25%, some of them, and that's because it's a lot of work, admin, fixing markets and stuff like that. So they're just being overly cautious to protect themselves. This is similar to when we had the mini budget, when the mortgage products were all over the place. And so what can you do? Well, my partner and I, we live in a property near Coulsdon, and we logged into NatWest this weekend, and NatWest offered us a rate at 4.9%, right? And so with that, that's on a residential mortgage. It's not a massive mortgage. We fixed that for 5 years. And so that is what we're doing on our personal stuff that we live in, because that just gives us certainty, and it's nicer to have the certainty on the home you live in more so than your investments, I feel. And so we fixed at 4.9 for 5 years. Is it the right decision? I don't know for sure. No one knows for sure. No one has a crystal ball. But what it does give us is that predictability. And what it also will give us is, look, we can, if the interest rate suddenly came down to 1.5% or 2% again, we can always leave early and pay a fine, right? Which we would probably do if that scenario happened, because the mortgage we're looking at is like a less than 100 grand. So we would probably just pay the fine and then get on a better deal just to have better cash flow each month. So interest rates are going to keep going up, and that means you've got to look at protecting yourself. Does it mean that you can't invest? Well, no. I've actually just viewed a property this afternoon in Dorking. Very, very under market value property. I say I'm not looking at flats, but this one is something I had to look at. It should be 200 grand. It's on for like 125. It's absolutely bonkers, and that's because they just want the money. It's a probate sale, off market. That's a great place to be in. They want to get that cash in the bank. They understand that the market is really slow. They probably could get 170, but they'd rather have 125 now. So that's one I'm working out the numbers on, and potentially we might work on that. If we go further on that, we'll show you around the property and show you all the numbers and stuff like that. But at 125, it really does stack up even with a higher rate, because the rent is going to be nearly £1 grand on that property. It's another one that I own, something in the block. So I'm looking for deals, and if you're looking to invest in deals, there are some really, really good deals. Just because the interest rate is higher, it doesn't mean the deal doesn't stack up, because there are some people that need to sell, and that's their priority. Now, what's this going to do for house prices? Well, we've been talking about this a lot. House prices have been pretty much flat this year. Obviously, data gets slower, and you get an idea on what's going to happen later in the year through things like Nationwide and Halifax. They're telling us what's going on in the market, and estate agents as well. They're telling us what's going on in the market. There are like declines. The market is going to start going down by the end of the year. I mean, I've said I think it's going to be around 8%. It might go down again next year as well, but it isn't going to go down as fast as people think. And so when I had the conversation with the agent today, they're just saying, look, there isn't lots of stuff for sale at the moment. So there isn't lots of buyers either, but no one's absolutely slashing prices at the moment, right? There isn't that big desperation to sell property right now. Now, each interest rate rise that happens, that definitely could change for sure, right? There definitely is going to be people that just need to get out of the market. Maybe they're going to lose their jobs with the impending recession, and they need to get cash in the bank. And so they might want a fast sale, like a probate sale, like I said, that I was looking at earlier. That is like stuff that is in that market. So you're not going to get, I don't think, slashed house prices now impacting the prices this year. So the prices are going to keep going down. Like, they're definitely going to go down for sure. But I think it's going to be slower and kick into the back end of next year. You'll see Rightmove prices are marginally down this month. It was like 50 quid or something like that, that the asking prices are down, showing people aren't desperate, but they are looking to shift their properties. And each month as this goes on, interest rates keep going, inflation sticks, then of course there's going to be some great deals out there. And that's the opportunity. In fact, 2008, 2009, 2010, lots of people made a hell of a lot of money with property because there were good deals on the market. So if you can get yourself in a cash position, maybe release some equity from an asset that you've got now, keep it at a lower rate before they go up even higher, and just sit on the cash. Don't be desperate for deals. Wait till something good comes along. I think you could do very well in this type of market, as people have always done. So if you want to learn more about property investing and stuff like that, we've got something called the Property Accelerator. I want you to join it. It's £1. You get a 7-day trial with that £1. You get access to all of our courses and programs. You can learn buy, refurbish, refinance. You can learn HMO, which is a high cash flow strategy, and service accommodation, and much, much more. So click on the link in the description. Come and join us in the Property Accelerator. Now's the time to learn property investing when houses are on sale. I'll see you inside that. Check out all the other content on my channel, including this video right here.